Hello everyone, it's Vaibhav here. I welcome all of you to today's session of JForex Indicators Explained, where we will be considering another interesting indicator. This time also, it is going to be a moving average, and we are going to consider the double exponential moving average. From the name itself, you can make out that this indicator is derived from two exponential moving averages. We use two different moving exponential moving averages to come at a price which is going to be smoother, and also it will have lesser lag compared to the original exponential moving average. So this indicator tries to remove, or if not fully remove, at least to some extent tries to reduce the two drawbacks of the EMA, and it tries to give a smoother average with a lesser lag. And we will see how we can take advantage of this indicator to look for profitable trading opportunities in this session, which will be devoted to finding out the properties of this indicator and then its uses on this platform, which has been developed by the Dukascopy Bank SA to make the trading experience fun and at the same time quite easy for understanding all this functionality, and easier to execute the trades as well. So here you will find this indicator if you simply do a quick search with the name double exponential moving average. Otherwise, you can simply go to the list, and it is listed amongst the overlap studies. Here it is, DEMA, double exponential moving average. Okay, now I have already plotted it with the default candle period calculation of 30. So this indicator is using last 30 hours of data to look at the volatility, and considering the volatility and the price direction, we are getting this plotting done where we have this average price plotted in a such a manner where we have it following the prices closely. It is not a leading indicator, so we can't really judge the future from this plotting, but it gives us the idea of the trend, whether the underlying instrument is moving in a bearish fashion or bullish fashion. We get to know the momentum of the underlying instrument, and accordingly we can make the assessment to go for the trading setup, whether to go for the long trades or whether to go for short trades. We can arrive at that conclusion considering these average values over the given time horizon. So for that extent, for that particular reason, this indicator is quite famous amongst the traders of all kinds, the newbies, the mature, the experienced ones. So all kind of traders rely on moving averages of one kind or another, and this double exponential moving average is one such. So we will be using this indicator to look for the trading opportunities. And one more aspect of it is that we can also consider the deviation from the average prices. If we see significant deviation and then consolidation on those extreme values, we can also try to look for the retracement of some sort where we can expect the price momentum to slacken a bit, and in course of time it should stay sideways, or it might even reverse the course to at least to the extent of catching up with the average prices. So we can count on the moving average data to give us the trend as well as extremes of the moves, and we can play both ways with the trend as well as some retracement, or you can also name it kind of a regression strategy where we look for the deviation, extreme deviation, to give way to some retracement toward median values, mean values. So that's what we are going to try to find out what are the current situation, what is the current situation, and how to play using these indicator, the DEMA. And for its functional aspects, we will be considering its properties, how we can edit and customize it. Prior to that, I would like to give you a brief introduction to its formula, how it is calculated. We take the exponential moving average for the given time frame. Now that DEMA is of 30, so for it to be calculated, first we will have to consider the EMA of the 30 candle periods of this Euro USD plotted on the hourly chart, and then we multiply it by 2, so we get twice of EMA 30, and from it we deduct the EMA of the EMA. So if I want to give you a quick refresher or quick explanation, I will have to add one EMA. Alright, we will actually need two EMAs. So this is the EMA 50. I will add one more, and this is another EMA 50. I will make it 30. Second one also we make it 30. Alright, so both of these are 30. Now the thing is, we have to take one plain EMA and one EMA of the EMA. So this is going to be EMA of the EMA. So we have EMA 30 and this is the EMA 30 of the EMA 30. So this is twice, or you can draw inference that this is derived from this actual EMA. So this is the exponential moving average of this EMA. And as I told you earlier also, we take twice of this EMA and then deduct this EMA of the EMA from that value, and we arrive at this double exponential moving average. So these two exponential moving averages are used to derive this value, where we have quite less lag compared to the original EMA or the EMA of the EMA. So don't confuse this two. The EMA of the EMA is not DEMA. DEMA is quite different and it is going to follow the price moves quite closely. And if you consider the EMA of the EMA, it is showing a lot more lag. It is also a lot more smoother, but that's not the point. We need the price action data to give us the idea of where the momentum is, if it is bullish or bearish, and to that extent the DMA is a lot more responsive compared to the EMA of the EMA. Now coming to the DMA, so I will remove both of these values and we consider the properties, how we can customize this particular indicator to take advantage of the pricing situation. So here it is, right? So let us now try to do some editing and see what kind of changes are observed whenever we use different applied prices or we change the candle period of the calculation. So I am going to make these use of these various prices, applied prices. If we use the closing price, then we have the plotting here. If I change it to high price, you will see the shifting of this plotted line of the DMA on the higher side. If I make it lower, then it of course shifts to the lower. So we have the DMA of the low price of each of these hourly candle, and that's why this shift is being observed on the lower price. Now if we use different prices, say open price, then it is shifting to some extent on the higher side as the momentum has been bearish. If we use the closing prices, it is more likely to be on the lesser side or lower side. Median price, slight change, typical price also slight change. Weighted closing price, where closing price is given more weightage. It is not showing much significant difference. Only when we use this high price and low price, we will have significant variation in the plotting of these two extreme values, as one will be derived using the high of each hourly candle, whereas another DEMA will be derived using the low of the each hourly candle. So that much difference is going to be there in the plotting of this DEMA also. Now coming to the candle period which are used for calculation of these DEMA. If we use 50, then we will have a lot more smoothing, and also there will be more lag in the plotting of these DMA compared to the price action. Price will be, of course, moving a lot more quickly. But since we are using almost 2 days worth of data while calculating the exponential moving average, it will have a lot more smoothing in its plotting. But as I said, the lag will be also there. So you can use this higher candle period data, candle period horizons if you want to look for the longer term trends or medium term trends, and you can even use combination of various time period DMAs. You can use lower time frame, you can use higher time frame, and you can also use crossover kind of structure. So we add one more DMA to the mix, and there you will see now when we make 25, oh, not 250, only 25. All right, so this is 25, this is 50, and one classical use is that whenever there is a crossover of lower time frame DMA from lower side to the higher side, that is indicative of the trend turning bullish from bearish, and whenever the lower time frame DMA crosses below the larger time frame DMA, that can be considered as a momentum shift from bullish to bearish. But of course, if we see that the price momentum is not there, if the price moves are rather in narrow range with the momentum being stagnant, in those kind of scenarios we will see frequent crossovers happening on both sides, and that can result in multiple wrong executions if we were to simply rely on this crossover formation. So we have to be careful, we have to keep in mind all kinds of possibilities which can happen in the market. Markets are dynamic, so all such kinds of possibilities have to be kept in mind, and we do have to keep in mind the drawbacks of any formation when we want to use it for looking at the trading opportunity. So we do have to keep this thing in mind. Now I will again remove this lower time frame DMA, and we will see more of the properties, the editing properties, what can be done. So this is the coloring combination. If you are a person who likes to play around with color combinations, then this is a good place. You can use different color combination to identify the downtrend, uptrend, or you can even use same color combination. So that's always up to you. If you want to change the style, if you want it more stylish, with higher width or lower width, all you have to do is change these parameters and you will have a lot more colorful, lot more stylish DMA being plotted on the chart. So all these possibilities are there. Ultimately, the aim is always to make it easier for us to identify the trend, and if this kind of alteration changes or make it easier for you to identify the trend, then I am all for it. You should try it out and see what serves your purpose best. So this makes it easier to identify the trend change whenever the momentum changes from one side to another, from bullish to bearish or from bearish to bullish. You will get a quick idea of that trend change on this plotting of the DMA. So it is very helpful. Now coming to other possibilities provided to us by this platform, we can opt for these options of recalculation on new candle only. If I tick it, then the recalculation will be done only when new candle formation takes place, and this value will remain constant for whole of that candle period. Now that the hourly candle period is being used, so it will remain constant for whole of this hour. If I untick it, then it will be variable and it will keep fluctuating. Okay, highlight the time period zone. If I use it as to highlight the time period zone, then you can see that this 50 DMA data, the calculation period is being highlighted here. So this is the calculation period on based on which these values have been arrived. Okay, Now we see other options. Calculate from custom data. Instrument, you can use it from the chart or you can define it fixed for the Euro USD. You can use the different time frame, the different time rate compared to the chart, or you can use it from the chart, or you can keep it fixed to this one of the option. So if you keep it fixed for the 15 minutes, then the DMA will be calculated for 15 minutes regardless of the charting candle period, even if it is hourly. Now the DEMA, which is going to be plotted, is being calculated on the time frame of 15 minutes. So this kind of changes can be done. Now if I make it 15, you can observe that the plotting is quite smooth and it follows the 15-minute candle period formation quite closely with quite less lag. So that's how it works. Advanced options. Now coming to on shorter period values, period display values at custom period end, or you can keep it fixed to custom period start, custom period middle, or each candle. So all these options are there. Side is spread side, the ask side or the bid side. You can use it from the chart or you can keep it defined. To ask and bid, show indicator on all periods. If you opt for this, then whenever you change the candle period from say 15 minute to hour or 4 hourly, it will be plotted. But if you uncheck this box, then only on the chart time frame on which this box has been ticked, only on that candle period the plotting will be done. Otherwise, no DMA will be shown. If you change it to say half an hour, then no DMA will be plotted. It's taking time. I think this is because of the network connection. Okay. So we got this hourly plotting of the Euro USD and no DMA is there. But if I make it again 15 minutes, the DMA is there for all of us to see. Now I will make it show indicator on all periods. So it will show up. Best period can be defined to none from 4 hours, day, week. All these options are there. So you can choose any of these option, any of the three options as per your requirement. So this is it from my side for today's session. I hope you have been able to understand the properties of the DMA and how you can take advantage of this particular indicator on this JForex platform to look for the trading opportunities and increase the probability of ending up the trade on the winning side. So that's it from my side. If you have any query or any idea to share, you can write back to me in the feedback section, and I would like to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. The platform link has also been included along with the Facebook and the Dukascopy Analytics page link. So do check out all these various resources provided by the Dukascopy Bank SA. See you next time around. Thank you all for joining in. Have a fabulous